dear students, welcome to this short video which will talk you down through the solutions for the questions that I've asked you to prepare. The first part of this video will correct question 14, part 3, that we commenced and completed in class but hadn't corrected. And then the remainder of this video will focus on question 11, part C, that you are asked to prepare during class time on Thursday. So without further ado, let's take a look at issue 3. Mads Gondak. The directors of Mads Gondak informed PTC auditors that during the year, a customer filed a lawsuit after sustaining a broken hip when she slipped on a spillage on the shop floor. The directors have recognised their negligence and have recorded a liability for the expected settlement amount. On review of the solicitor letter, the liability record is in line with the solicitor's expectations. However, management noted that the legal case has resulted in bad publicity for the organisation, with sales reducing month on month. The issue we have here is that a customer slipped on the shop floor. However, management have recorded a liability for the expected settlement amount and have included a liability in line with the solicitor's expectations. We have no specific standard here, nor do we have a material misstatement, as the liability included in the financial statements coincide with the expectation of the solicitor. Therefore, no material misstatement exists. In addition to this, we do not have a number of issues or a number of misstatements associated with this client. Therefore, the issue cannot be pervasive. As a result of that, an unqualified opinion must be issued in respect of Mads Gondak. And with the unqualified audit opinion, we will issue an emphasis of matter paragraph to the users of the financial statements, drawing their attention to the legal issue that occurred throughout the year. Let's now take a look at question 11. Okay, so in part C, you are Ashton Donoghue, an audit senior in Rogers & Co. registered auditors. You currently have 3 audit engagements nearing completion. To your disappointment, each of the audits have had a number of issues in the current year. You are now assessing the requirement to modify the opinion for each company. So let's take a look at Ice Donuts Limited. Ice Donuts Limited provides luxury donuts to the Dublin market. During the audit fieldwork, the audit junior noted that management appeared to have made significant investment in property, plant and equipment during the year. On further investigation, it transpired that the significant increase in property, plant and equipment was due to extensive repair work conducted in the company's factory and stores. On discussion with management, they recognised the expenditure incurred did not meet the capitalisation requirements as prescribed under IAS 16, but refused to reverse the capitalisation of the assets in the financial statements. So the issue at hand here is that management have capitalised revenue expenditure in the balance sheet in respect of property, plant and equipment. The standard under consideration here is IAS 16. Under IAS 16, all revenue expenditure should be expensed to the income statement. As a result of the accounting treatment applied by the client, both the income statement and the balance sheet have been overstated as a result of the capitalisation of property, plant and equipment. Although we are given no numerical amount with regards to materiality, it has told us that there was a significant movement in property, plant and equipment. In cases like this, you can say to me in your exam question that you assume materiality is high. Okay, so in this case, we are going to assume that the item the misstatement identified is material. We only have one issue at hand with regards to how the property, plant and equipment has been capitalised throughout the year. Therefore, it is not pervasive. As a result of the refusal to reverse the capitalisation of assets in the financial statements by management, the audit opinion that should be issued in this case is a disagreement except for Issue 2. Circle P Limited. You recently conducted the audit of Circle P Limited, who primarily manufactures steel components for the Dubai market. During the year, a new player entered the market, which has subsequently resulted in the company experiencing a difficult year financially. During discussions with management, they noted that there was concerns with regards to the continuation of the business, noting the company had lost a number of significant customers and contracts. In addition to this, new regulation is expected in the market in the coming years, which will require substantial investment from the company. So, here the issue at hand is that Circle P has experienced a difficult year as a result of new entrants into the market. In addition to this, there's concerns regarding the continuation of the business, with the company losing a significant amount of customers and contracts. As we can see here, we have significant indicators around going concern, the ability of the organisation to continue in business for a 12-month period. We do not have a material misstatement, nor do we have matters that are pervasive in nature. As a result, an unqualified audit opinion would be issued. However, as a result of the new entrants entering into the market and the loss of customers and contracts that have led to a going concern issue for the organisation, we would include with our unqualified opinion an emphasis of matter paragraph, drawing the user's attention to the ability of the organisation to continue in business for the next 12 months. Issue 3. Peppermint Tea Limited. While planning the audit of Peppermint Tea Limited, you were requested from management the minutes of the meetings held during the year. Following a number of requests, management have declined to provide an audit team with the minutes noting there is nothing of interest in them. Here we can see that the audit of Peppermint Tea have unveiled that the management are unwilling to give us minutes of meetings. This is a document that is required by the auditor throughout the audit process. We do not have a material misstatement, nor do we have issues that are pervasive in nature. However, we do have a limitation of scope placed on the auditor by the audit client. As a result, if management continue to be unwilling to give us the minutes of the meetings, regardless of whether there is areas of interest or not in them, we will be required to issue a limitation of scope audit opinion, except for. I hope you found this video useful. I will, of course, be available in class, hopefully the end of this week, and should you have any additional questions, please feel free to ask me then, or in the meantime, you can drop me an email at katie.scallon@setu.ie. Thank you for listening.